Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 14th of August, 2023. Right, everyone, let's get into it. So we have an update on the SEC versus Coinbase case here from Meta Lawman on Twitter. He says, 6 securities law scholars file a devastating amicus brief in support of Coinbase. Law professors from Yale, University of Chicago, UCLA, Fordham, Boston University, and Widener filed an amicus brief last night being August 11th, that absolutely shreds the SEC's investment contract theory. So, this is just continuing the trend of seeing people being on Coinbase's side in this case. And obviously, as I mentioned last week, the SEC continues to be this big bully that kind of has disregard for the law. They lost their case against Ripple. Well, parts of the case against Ripple because of that, right? They were disregarding what was actually written in the law, and it seems that that's what they're doing with Coinbase here. And I've said this before. I've gone through it before. I basically said that the only thing that can change this, or the only thing that can kind of like make this a more positive outcome, is if Congress was to actually legislate on this and make it a lot clearer for companies like Coinbase. Otherwise, the SEC would just use the ambiguity to go after these companies. And, some of the time they'll force them to capitulate. Other times they will fight and then capitulate. And then sometimes they'll lose, right? They lost against Ripple. I expect them to lose against Coinbase, but they won against Kraken, right? The Kraken agreed to shut down their staking service and paid a fine. They won against EOS back in the day, right? Which, back then I saw them do that and I was like, this is crazy. They fined them $24 million, and then they got away with like $4 billion or something like that. But it's all about what they're going after them for, right? They're going after them for issuing an unregistered security. It's different to them going after, Coinbase for trading unregistered securities and all these sorts of stuff. And then I think recently, I mentioned that the BitREx thing, the SEC went after BitREx. And again, BitREx just settled because they're like, well, we're in bankruptcy anyway, and we'll just pay you out of the bankruptcy kind of filing here. So as I mentioned last week, SEC just continues to be that bully, just continues to be that mafia or mob entity that basically gets protection money from these companies in the form of settlements or fines. So great to see that these law professors filing amicus briefs on behalf of Coinbase or in support of Coinbase against the SEC's kind of frivolous lawsuit against them. So great to see that, and I'll keep you guys updated if there are anything else on that comes out. But you can check out the tweet. I'll link it in the YouTube description below for you to do so. All right, Chainlink God put out a really great tweet over the weekend where he basically summarized some of the really exciting stuff that's been happening over the last few months when it comes to user experience. So he's got a list of things here, and I wanted to briefly go through each of those things on this list because I think that's really important. So the first thing is account abstraction, or EIP 4377. So account abstraction has been a pretty big topic in the Ethereum community this year, especially over the last 6 or so months. There's been a lot of work happening on that in the background. I've highlighted a bunch of it. There's been a bunch of work from different teams, such as Argent, that have been working on it for quite a while now. But really, the wheels seem to be turning, right? They seem to be turning, albeit slowly, but turning on account abstraction and making the user experience generally better for users at layer 2. There was an EIP that was going to, I think it's 4377, or no, I think it's actually another EIP that wanted to allow people to convert their externally owned account or their normal Ethereum address into a smart contract, which would essentially make it, I guess, an account abstraction wallet, depending on the terminology that you use there. So there's all that sort of stuff happening in the background as well. But yeah, it is a slow kind of chug here. Now, next up, we have Paymaster gas fee sponsors. So what this is basically what I spoke about last week when it comes to Visa allowing people to essentially pay gas fees in whatever token they want using their debit or credit cards. This has been a thing that's been around for a while, basically in the form of something called meta transactions, where essentially you could pay a fee in any number of supported coins or tokens, and then obviously it would be converted in the back end to ETH, because ETH is the only coin that you can use to pay fees on the Ethereum layer 1 network. You have to settle in ETH there, but it was abstracted away from the user, and it obviously made the user experience and makes the user experience a lot better, because at the end of the day, let's just say a user has been onboarded, they're just doing stablecoin stuff, they have some USDC or some DAI or whatever it is, and they don't have any ETH. Well, they shouldn't be prevented from using the Ethereum network, from using the layer 2s, just because they don't have ETH. And now with stuff like Paymaster and of course meta transactions, things like that, once they've been, once they get added as support to various wallets and various other infrastructure providers, we can allow for that abstraction away of gas fees. And as I said, it's still ultimately paid in ETH in the back end, but for the user, it's displayed to them in whatever token they choose, really. I mean, I do think that the end state would be ETH and stablecoins. I don't imagine people paying for gas fees in many other tokens, to be honest, considering that ETH and stablecoins are definitely the most liquid, they're the most used, they're the most logical for it to be used as gas fees. But ultimately, it doesn't matter if you're using stablecoins. As I said, it's still settled in ETH. Then there's passkey authentication, which was something that I mentioned last week as well. Turnkey has been pioneering this, has been using this. They had a demo with Goldfinch, and you can go look at last week's episode for a breakdown of that. There's MPC and Secure Enclave Custody, which is not necessarily new, but has been getting more and more traction. I know Coinbase Wallet uses it. You have obviously the L2s, Optimistic and ZK rollups, just absolutely taking off, right? I think they've taken off more than people thought they would, considering it's a bear market still, and considering like how quiet the market is right now. And I'm going to talk about that towards the end of the episode. But obviously, that's making huge strides, and I've talked about that a lot. We have proto-dank sharding, or EIP 4844, coming in hopefully November, as I've said before, as part of the Denkun upgrade. And then, of course, cross-chain messaging, such as Chainlink's CCIP solution there, which I talked about a couple of weeks ago, basically allowing for arbitrary message passing between different chains, allowing for mint and burn of tokens on different chains, so you don't have a honeypot of tokens on these bridges. So yeah, a lot of exciting stuff happening there. And Chainlink God basically finished off this tweet by saying, the user experience of Web3 is becoming rapidly abstracted and simplified. And it really is. It really is. It really feels like we're having this UI UX renaissance within the crypto ecosystem right now, where we know we have the infrastructure in place, L2s. We know they're getting cheaper over time. We know that that we can get the fees down to sub-cent. We know that there is going to be a massive influx of users at some point, and there is a lot of demand for these sorts of things. And we just need to abstract away as much of this stuff as possible for the end user, so they get the best user experience possible. As I've said plenty of times in the past, the future is not MetaMask, guys. Like, the future is not MetaMask interface. The future is much closer to what we see from wallets like Rainbow and Uniswap. But even then, and Coinbase Wallet, of course, but even then, it's still not simple enough. It's still not abstracted away enough. It needs to be as dead simple as possible. And I've talked about it on the refuel, of course, where essentially we need, just 2 clicks max of someone to be able to do something within crypto using a wallet. And I think we're going to get there. We're going to get there pretty rapidly. Relatively rapidly. I mean, I say rapidly, and maybe some people will think, oh, we're going to get there in 6 months. No, I mean relatively rapidly, and it's probably going to take a couple more years. And UI UX is always improving, but it definitely feels like we're on the precipice of a renaissance in UI UX in the crypto sphere here. All right, moving on. So ETHWave, this Twitter account, put out a tweet today where they basically summarized the activity of staking around since ETH withdrawals went live. So they say here, since ETH withdrawals were enabled, which is 3 months ago now, April, May, June, July, August. I think it's 3 months, 3 or 4 months. I'm not doing the math correctly in my head. Yeah, it actually is, because the 14th was when it went live, I believe, back in April there. So since then, there have been over 10 million ETH deposited / queued for staking, over 6 million net ETH flow to the Beacon chain, over 460,000 ETH burned, and that translates to $18.5 billion deposited, it's $11 billion net flow, and over $850 million burned. So yeah, I mean, the Ethereum network is such a powerhouse. Doesn't matter if it's staking, if it's burning fee revenue with EIP 1559. There is so much economic activity going on. And as I mentioned before, it's still a bear market, guys. We're in the depths of the bear market. I actually think that I was looking at the chart the other day. In terms of volatility across our BTC and ETH, I think this is the lowest point almost in history of volatility for those 2 coins there. And what that means, as I mentioned before, the market is dead right now. There's no new money coming in, and as I said, I'll explain more about that towards the end of the episode. I have a tweet that I want to talk about. But in the face of all of that, we still have massive growth of ETH staking. We still have a lot of ETH being burned, and I'm telling you guys, this is all not being priced in right now. This is all going to be priced in when demand comes back, but right now it definitely isn't. So there is definitely a kind of opportunity there in my mind. But yeah, great to see this breakdown of things from ETHWave here. All right, so EigenLayer has announced that they'll be raising the cap for their LST restaking on August 22nd at 7 a.m. Pacific time. So they say here there will be a global pause that takes place if any one LST hits approximately 100,000 ETH restaked. So essentially, they're going to be raising the limit up to 100,000 ETH, I think, per LST, but there'll be a global pause that happens once one of them reaches that limit. So, for example, if 100,000 RETH is restaked, but only like 60 or 70,000 ST ETH, it will still be paused, so you won't be able to enter into the ST ETH pool anymore, which I guess like makes sense since they're still doing their guarded launch here. But this is crazy, guys. This is actually really crazy that this is. I actually do believe that cap's going to get hit very, very quickly. I mean, the appetite for restaking is just insane. There is a kind of like tool that you can use to track it. I think Nethermind built it. Yeah, it's here. I'm just bringing it up now at restaking.nethermind.io. You can actually see the caps here. So the caps right now are quite low compared to what they're going to be raised to. They're 15,000 ETH per LST here, as well as Beacon Chain ETH, which is just natively restaked ETH there. So what they've said is that they're going to be raising all of these caps to 100,000. But as I said, if RETH reaches 100,000 before ST ETH and CB ETH, then it would only be it would global pause, as I said, right? It would globally pause everything, and you wouldn't be able to enter into any of these here. But yeah, just keep that in mind if you want to get in and you want to restake some of your LSTs. It's going live. I guess like the cap is being raised at 7 a.m. Pacific time, so that's PT, that's Pacific time in the US. There's more details about this in the Twitter thread, which I'll link in the YouTube description below. All right, Diva has announced that their first operator testnet is now live. They say here it's the first Ethereum liquid staking solution powered by distributed validator technology. So in this tweet thread, they explain exactly what a Diva node is and links to the relevant places to get started with this. But they say a Diva operator node enhances Ethereum by efficiently performing validator duties. It connects to Ethereum, coordinates with other Diva nodes for key management using MPC DKG, and collaborates for validation using Diva's distributed validator technology. So very cool to see that we're getting, I guess, differentiated liquid staking protocols now, because obviously we have a bunch of them out there right now, but Rocket Pool's decentralized, a decentralized LST. You have Lido, you have Stakewise V3, and obviously all of those can integrate distributed validator technology into their stack. But Diva seems to be doing it from the get-go. They're launching basically as a new LST with DVT at launch, basically. And that's on the testnet right now, and that will be on mainnet, obviously, at some point in the future here. But yeah, I love seeing products differentiating themselves here. I love seeing more of these staking products come online, especially, obviously, because at the end of the day, competition never hurt anyone, I think. So if you're interested in becoming a Diva operator on testnet and potentially on mainnet as well, testnet will be good practice for you. So you can go check out this tweet thread. I'll link it in the YouTube description below for you to do so. All right, so I was just talking about overall crypto user experience and user interfaces before, and I came across this interesting tweet from Brian Armstrong, of all people, actually, over the weekend, where he said, one thing that On-Chain Summer, which is Base's on-chain initiative, is exposing is just how broken our user experience is in the main Coinbase app for NFTs, dApps, and L2s today. Sorry to say, but true. If we face the truth, we can get motivated to improve it. These need to be first-class experiences, and On-Chain Summer is a great impetus to have every employee feel that pain ourselves and fix it. Coinbase Wallet is farther ahead on this dimension, but still lots of work to do there as well. The good news is that we have just about every employee dogfooding these flows now, and if you have a UX pain point or something not working, you can send Coinbase feedback in the replies to this tweet, and they'll try to prioritize it. So the reason why I wanted to highlight this tweet in particular is because how often do you see a CEO or founder of a company shitting on their own products? Basically, that's what Brian is doing, right? He's basically saying that our Coinbase wallet, while it is farther ahead in UI UX, in the UI UX dimension, and it is decent, it's also not great, right? It needs to improve. It needs to be improved radically, and there needs to be a lot of work done in order to abstract away certain things in order to improve the overall experience. And I think this sends a strong signal out to the ecosystem that not only is Coinbase serious about things like Base and serious about obviously their exchange and fighting the SEC and stuff like that, but they're also serious about making sure that they can essentially improve their wallet, improve Coinbase wallet, which, as I've said before, is already great, but they're serious about improving their wallet infrastructure in order to basically onboard the masses. Because at the end of the day, that's what they're trying to do with Base. And if the front door isn't a friendly user experience, they're gonna lose people, because it's all about the funnel. At the end of the day, right? There is this kind of there's a concept of this funnel where essentially you have at the top you have all these people funneling in, and then deeper and deeper that you go through the funnel, you lose people for various different reasons. And it's typically used in marketing. You have a marketing funnel. At the top, you have all these people coming in. So you have like 1,000 people coming in from the top because they've seen your ad, and they all click on it. But then once they've come to your site, right, because you've marketed them some kind of product, say you've tried to sell them some clothes, they come to the site, and the vast majority of them will click off. And you'll be able to tell sometimes why they clicked off. Maybe they clicked off because they just lost interest, or it was too expensive for them, or a number of other reasons. A lot of the time, you won't know why they clicked off, but there'll be a small portion of those that actually make it to purchasing a product. So let's just say that 10 people out of that 1,000 actually purchase a product in the end, and then you do like a cost benefit analysis here of, okay, well, did our ad spend actually result in a profit from those 10 people spending on there, and is that the conversion that we wanted? So the same is true for something like a crypto wallet. If 1,000 people download the wallet but only like 10 people are using it semi-regularly, let's just say 10 people log in each week out of the 1,000 people that have downloaded it, well, that's not a very great conversion. Okay, so why are people not using it? Is it this reason? Is that reason? And really, the only way you can tell is through direct feedback. I mean, the only real way. You can guess through other ways of measuring these sorts of things. You can do A/B testing, all that sorts of stuff, but really you need the feedback from the users themselves. And this is Brian Armstrong sending out that strong signal, being like, hey, we want your feedback on this, and hey, here's me giving feedback to our own products, and here's me really just shitting on our own product, which I think makes other people feel more comfortable in order to send that honest and potentially harsh feedback to Coinbase that basically says, this sucks for this and this reason, and then they go ahead and fix it. And that's exactly what we need. Sugarcoating things doesn't help anybody, and I'm glad that Brian put out this tweet, because as I said, it sends out this strong signal to the market, or to the crypto ecosystem, that Coinbase is serious about improving their wallet, and they really want to be at the forefront of crypto wallets here. So on that note, if you do have feedback about Coinbase wallet, be sure to reach out to Coinbase and give them feedback on this. You can do it on the tweet itself from Brian's tweet here, or I'm sure Coinbase has a bunch of forms on their website for you to use to give feedback to them there. All right, David Krappus here has put out a new blog post titled "Rollups Are Real, Rollup Economics 2.0." So I think I may have highlighted his original Rollup Economics blog post a little while ago on the Refuel. But essentially, if you are at all interested in how rollups and L2s handle the economic side of things, such as fees and like shared sequences and staking and kind of like gas fees and costs and profits and all that sorts of stuff, this is a must-read post. And I'll of course link it in the YouTube description for you to check out. But not only is it a great read, it also has a really great bunch of diagrams here that basically allow you to visualize what the flow actually looks like. And you can see in this one here, the flow goes from users, the L2 fees goes into these services, that goes into shared services, and potentially back down to the L1, and then they split these things up into like data costs, operational costs. At the end of the day, it really does come down to economics. The same thing as an L1. L1 has economical considerations, so does an L2, and that's exactly what they're doing here. What this blog post is doing. It's basically explaining the differences between this and how the Robust Incentives Group, I believe the ones doing this at the Ethereum Foundation, is thinking about this. So you can go check this out. I'll link it in the YouTube description below for you to do so. All right, speaking of layer 2 things you should read, Raul from the Off-Chain Labs team here put out a tweet thread over the weekend saying, last week we announced Bold, our new dispute protocol at Off-Chain Labs, which can enable a permissionless validation for Arbitrum technology. This security property, along with fraud proofs, are what make Arbitrum technology decentralized and safe, but why is Bold unique? So if you're interested in diving in deeper into what Bold actually is and how it all works, you can go check out this Twitter thread from Roll. I'll link it in the YouTube description below. But another reason why I bring up this tweet thread as well is because I wanted to use it as a springboard for a little discussion around L2s generally, and in particular, L2s like optimistic rollups. So there's been a bit of discussion I saw over the weekend around this, and I've talked about this a lot on the Refill before, about how right now Arbitrum has fraud proofs, but they're permissioned, but they have a roadmap to getting towards permissionless validation and fraud proving on the Arbitrum networks. But the other popular optimistic rollup is everything built on the OP stack, right? OP mainnet, Base, Zora, Avo. There's a bunch of these now, right? Now, Optimism doesn't have fraud proofs as part of the OP stack. So none of these chains actually have fraud proofs enabled. So essentially what the security model boils down to is really just the operator of the actual L2, of the OP stack, of the OP mainnet, of Base. So in reality, you could say that these optimistic rollups, aren't really optimistic rollups, and also their security guarantees are as good as a centralized exchange, really, when you really think about it. Now, this is a temporary thing, hopefully. I do believe that Optimism is going to release either their fraud-proof technology soon and implement it soon, or just leapfrog right over it and go straight to validity proofs, which are ZK proofs. That'll definitely come, because I think it's a liability for them not to do that, not only for security reasons, but also for themselves, because they obviously want to decentralize out as much as possible, but keeping these things very centralized is also not a great look, and not great for the users either, obviously. But also on this note as well, I saw some comments on Twitter saying that, it's kind of hypocritical that so many people in the Ethereum community gave Polygon shit over the Polygon POS chain and about how it's not a real L2, blah, 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 right? But then you have the OP stack kind of not really an L2 at all right now, because they don't have fraud proofs implemented into their stack. So, why are people not calling that out? And I think that's totally fair. I mean, you guys know I'm a huge fan of both of those teams. Obviously, I'm an advisor to Polygon. I'm also an investor in Optimism. I'm a huge fan of them. But you have to call a spade sometimes, right? And really, realistically, the Polygon POS chain is much more secure than an OP stack chain, because the POS chain has independent validators that verify the network, right? Has those crypto economic guarantees as well. And obviously there is a bridge as well between Ethereum and the Polygon POS chain, but there is a time-locked multi-sig last time I checked on that bridge, and the multi-sig holders are from independent entities as well, whereas the OP stack chains don't have anything right now. They really just have a very centralized setup. Now, as I said, I don't think this is going to be the case for very long. I do think that either fraud proofs or validity proofs will get enabled, but until then, I can't in good conscience tell people, hey, this is somewhere where you should park lots of money on. I've been saying it for a while now. I don't think that you should put lots of money on these things. Not because I don't believe that if something were to go wrong, these teams wouldn't fix it. They 100% would, but it's also got to do with the fact that, okay, how much do you trust these teams? Because it really is just trust me bro finance right now on these things, right? It's like you put money there, you trust that the team operating it is not going to rug you. Obviously, the chances of, the Optimism team, the Optimism Labs team, or Coinbase team running off of the funds on Base or OP mainnet is extremely low, if not pretty much 0%, but that's not the point. The point is that it can happen. The point is that those funds could potentially even be frozen for one reason or another. Maybe they get a subpoena to freeze the funds or something like that. So you should never trust your funds on something that is not decentralized and secure. That's why for me personally, I have the vast majority of my wealth still on Ethereum L1. I mean, I struggle to bring it to layer 2s, let alone other L1s, and I don't normally. I do have things that I play around with on various different addresses out there, but at the end of the day, I would never store my entire net worth on on one of these L2s at this point in time. When they eventually get to a point where they're fully decentralized, where you've always got the option of exiting via L1 with the escape hatch, and where no one could take that ability away from you, then of course I'd feel much more comfortable. But right now, really, none of the popular ones are like that. Arbitrum is the closest to getting to that. I do believe that they'll all get there eventually, or at least most of them will get there eventually, but right now that's not the place that they are, so good to keep that in mind there. But yeah, anyway, as I said, I'll link Roll's Twitter thread in the YouTube description below for you to check out. All right, just to round out today's episode, I had a tweet that I put out that I alluded to earlier in the episode, and the tweet reads, "The crypto market is not pricing in anything right now because there's no new money coming in. This is why we see a lot of positive news not translating to sustained upward price action. This will not last forever, and it's why I think now is the best time to accumulate." Now, I should also just say before I dive into this that this is not investment or financial advice. I am not telling you that you should buy anything right here. I'm just giving my perspective on things. Now, this is not news to regular Refuel listeners and watchers. I've talked about this a lot of times on the Refuel over the last probably 6 months at least. But what I really wanted to just quickly recap on was that the funny thing about the market right now, as I alluded to earlier, it is the volatility is as low as it's probably ever going to get. It is almost at all-time lows from the charts that I've seen. Now, is this going to continue going lower to new all-time lows, or are we going to bounce from here? What's the price action going to look like? I can't tell you that for sure. I have said before that I think that the rest of this year will be that kind of low volatility crab market, and that next year will definitely be more positive. I mean, I say definitely like it's a sure thing. I mean, I think and I believe it should be a sure thing, but obviously that's not a kind of like crystal ball prediction. It's just me making my own prediction based on a number of different factors that I've gone through before. But what I really wanted to focus on was not so much that, but more that this thing of the positive news that we have, a lot of positive news. Obviously, last week we had PayPal and Visa announcing they're building on Ethereum, and the ETH price did absolutely nothing, right? We have all that positive news coming out. We have all this adoption happening. Even if there's no new money coming in, we have a lot of people just using these different kind of tools. Base obviously had a great launch. There's a lot of NFT activity happening on the Polygon POS chain, for those of you who have been paying attention to that. So just a lot of various different things happening here. And also outside of crypto, I'm talking to a bunch of teams that are doing stuff with crypto technology that isn't necessarily on chain yet, but is happening outside and affecting real world products and services that will eventually come on chain. But similarly as well, someone commented on my tweet here saying, and a lot of the negative news is not translating to downward price trends either. And that's exactly right? During this kind of low volatility crab environment, it doesn't matter if it's positive or negative, it's not reflected in the price. Now, I do think that on the negative side of things, it's because we've really just run out of sellers, right? We've completely run out of sellers. No one wants to sell. The people that are around right now are traders that are just trying to scalp some volatility, and long-term investors who are stacking and obviously are in it for the long haul here. They're not going to be selling at these prices. They're hoping to sell at much higher prices, right? And then on the flip side of the positive news not leading to upward price action is because, as I said, there's no new money coming in. There's not new money coming in to push it up. And as I've explained before, the people that are buying right now are limited in how much they can buy. They have to wait until they get paid and things like that, right? Whereas if there's new money coming in, there's no need to wait for that. You just essentially have all these new people coming in with new money, and it pushes prices up relatively quickly, rather than the accumulation kind of zones that we see typically during the tail end of bear markets. And that's why, as I said before, I believe we are at the tail end of a bear market. I believe that next year is going to be a lot better because we're out of sellers. Everyone that was going to blow up has blown up, right? I know there's rumors still about Binance blowing up or Tether blowing up. Those things have been around for ages. I mean, especially the Tether stuff, that's been around for a long time now. But generally, the stuff that we can see, the stuff that has played out since basically, I guess, like Terra blew up, and even before then, all of that has been flushed out. So now what we have is we have the accumulators, we have the kind of like sideways price action that we've seen that will probably continue towards the end of the year. But next year will be, in my mind, a lot more positive. I do think towards the end of next year, there is a really strong chance we see new all-time highs on ETH and BTC, and then leading us into a proper bull market in 2025. Now, I could be completely wrong on this. As I said, this is not investment or financial advice. Do not do stupid things with the kind of prediction that in 2024 and 2025 you're going to make all this money. That's not how you should play it. How you should play it is that if you really do believe that, like I do right now, that they're in accumulation zone, that all this positive stuff hasn't been priced in yet and will be one day, then you would be accumulating right now if you believe that. And that's exactly what I've been doing, but I'm in the same boat, right? I don't have any spare fiat left from when I cashed out during the bull market. I mean, I've deployed pretty much everything. So now I'm really just earning yield from various different places and buying ETH with it. Obviously, the yield that I get from ETH staking, I already have ETH, so I don't have to buy the ETH with it. It's just stacking it there. But yield from other sources, I have to wait for that to pay out, right? I have to wait like a few days or a week or 2 weeks, just depending on when I feel like kind of selling it and things like that. And then I can go into ETH. So it's a slow trickle in. And that's exactly why you see this time-based capitulation that I've discussed before, which I think we're at the tail end as well, but also why you see things going slower. But eventually there will be new money coming in. It will start pushing the price up, and then it'll just become a self-fulfilling thing from there, where it just snowballs out of control, and we get a fresh new bull market. So there's your daily dose of hopium, I guess, or weekly dose of hopium on the refuel there. But that's going to be it for today's episode. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks, everyone.